watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are David Shapiro from Sasfin Securities and Cobus Potgieter from Southern Cross Capital. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Just a heads up, this episode is pre-recorded, but you can still continue sending your questions as there is a Stockwatch every day, and Simon is back on tomorrow. Gents, thank you so much for your time. It's been quite an interesting time to be a PGM miner. What is it today? Wednesday. On Monday, we had huge jumps in that sector. And yesterday, there was some breathing that came through those stocks. But today, back again, as we are recording this, Northern Platinum up 7%, Implats up almost 7%, African Rainbow Minerals also participating there with a jump of 6%. David, I understand yesterday I actually spoke about the PGM miners, and the general consensus was that they're up, but the platinum and palladium prices aren't. What are you seeing today?
I'm actually trying to get my head around it. My view is that, of course, you're now seeing a China that's put its growth rate at 5%. I don't think that's a major issue, but I think you're starting to get a better feel in global markets about perhaps a recovery and the end of the conflict between Russia and Ukraine. We've seen the Gaza Israeli situation settle down. Yes, they're still throwing stones at each other, but not lobbing rockets or anything like that. So I think overall you've got Trump now. Also, we're getting to the end of his policy. We know what his policies are. So, and out of the blue, we've got a recovering euro. A euro market, and also a very strong Chinese market. There's also the defense spending that's going to come out of Europe. So I think they're all related. I'm trying to put my head around it because what else would drive it? So I think there is a view that, with all the defense spending that's going to take place, there's going to be some kind of demand for metals. Where platinum fits in, I've got no idea. But anyway, I think generally we've seen mining shares pick up, and I can only associate it with that. But apart from that, I've got no real intellectual explanation for the sudden gains. But I'll live with it. If shares move that way every night, I'm happy.
Many moving parts here, and it's quite interesting. David mentions that, there are some people betting on the end of the Russia-Ukraine war, and it's quite interesting. Yesterday, I did have an interview on a technical analysis with Pietri Riedelinges betting on a recovery in Mondi, for example, basically making it an end-of-war play. How much thought are you putting into an end-of-war position, Cobus?
That's a difficult view to take. Frankly, I believe the market is pricing some sort of, art of the deal occurring on the Trump side, and ultimately they might relinquish and continue, to some extent, continue to support Ukraine in this endeavor. So, look, I like Mondi for other reasons. It's bottomed out enormously, and frankly, some of those underlying commodities have been in oversupply, and we should see that slowly wash out of the system over time. But beyond the post-war analysis, I think one thing we can say with reasonable certainty is, call it the rearmament of Europe and call it the re-indigenization of the defense industry within Europe. We've seen over the last month EU domiciled defense stocks massively outperforming their US-based peers. Frankly, a little bit of reindustrialization taking place within Europe, and hence the euro strength we're seeing of late as well. I think that has a lot of runway yet to go, and that's a trend that the market is certainly betting on, and I believe will continue to bet on, because the US has just become a less reliable partner than they have been since the end of the Cold War.
All right. Well, gents, let's get on to the questions that have come through today. A viewer sent in a number of stocks saying that they'd like to find out at what price it would be best to enter into the following stocks. I don't know if you have the exact prices, but let's take a look at the current prices and actually see if maybe there could be opportunities there. Let's start off with Naspers. The last time I checked, that had actually had an incredible run until Process made an announcement that they are buying, is it Just Eat Takeaway.com in Europe, and we saw a huge slump there. But I can imagine that it wasn't enough to reverse all the gains that we had seen ahead of that announcement, of course, with the upside that we have been seeing in Tencent. David, at this point where the Naspers price is, would this be a good opportunity considering the long-term outlook for the share?
Well, you've got to look at the long-term outlook for Tencent.
Okay.
You know, regardless of what you say, as long as they don't sell more Tencent, I'm quite happy. You know, to go and sell Tencent and they'll go put it into a food delivery business, you know, that's just crazy. Yeah. And I know it generates cash, and they can put a good spin on, you know, chaps on bicycle delivering your pizzas. But from my point of view, I think I would hold it. I'll continue to support it simply on the back of the gains that we are seeing in Chinese tech shares, and Tencent's well placed. So, you know, from that point of view, I think the uptrend could continue. But just get rid of all the other noise about all the other businesses that they hold and just focus on Tencent.
Was it 79 billion rand that deal is worth? Absolutely crazy. That kind of money just, outside of my comprehension. Cobus, I do see also that actually even after the dip we had on Naspers, clearly some investors found an opportunity and that share has recovered a little bit. Just looking at Naspers at this point, would this be an opportunity to get in or not?
I think David summarized the negative market sentiment very succinctly there. And that's precisely what the market was worried about. We were hoping Fabrizio would be more of a caretaker's CEO and not stick out his neck and make ridiculous acquisitions. Now, I mean, frankly, we know they sort of behave as a private equity holding company, and they make these bets. Sometimes they destroy shareholder value in that process, and a lot of Naspers shareholders were perhaps rightfully disappointed in that outcome. However, again, as a proxy for holding Tencent, it is an enormously attractive vehicle. For a South African shareholder, it is locally domiciled, so it doesn't eat into my foreign allowance. B, it's trading at a significant discount to Tencent. They are still supporting that share price through buybacks, which I do like. We've just seen another announcement. I believe they deployed another 4 billion rand in capital over the last 3 days and supporting it. And more than anything, as a proxy for holding Tencent, we are quite bullish Chinese tech. Tencent seems to be well positioned to get a bit of that AI premium. And Naspers just gives you a very cheap exposure into that. So cheap, in fact, that despite these buybacks, the discount is the widest we've seen since the most recent significant restructure of 2 years ago actually occurred, and they started doing these very aggressive buybacks. So the current entry point is certainly very attractive. And of course, in the long run, one hopes for a bit of a reflation in those Chinese equities and Chinese tech in particular to do well.
All right. Well, let's take a look at Shoprite. Yesterday they released results, and I don't know what investors wanted, because I think it was down about 4% yesterday. Just taking a look at what it is right now. Okay, my computer is still trying to calculate. Yeah, it's up about 2% as we record. 272 Rand. David, your thoughts on entry into Shoprite at this point? I mean, this is one that a lot of people see as frothy.
Yeah, I like frothy businesses because it means they're successful. So
Yeah.
that doesn't worry me. I just think they've knocked out their competition. They're so far ahead of everybody in whatever they're doing. And you can take apart their results and challenge. In fact, the margins were good, and I know that they're pushing for higher margins. But I mean, wherever you look, this is a very successful business, and I'm quite happy to continue to support it, even though you might consider it frothy. So I think, given the competition, given what else is out there, I still think it stands ahead. You might have Pick n Pay recovering. You got Spar trying to recover. You got all the other grocers just in their wake. So and Woolworths as well. We saw their results. Food very good, but everything else not so good. So I just say, if you want exposure to the retail side, particularly outside of clothing, I think they're just a wonderful business. And you just see more and more of the chaps on these 60/60s. I love to try and run them over as well. They're mad drivers, but you've got to commend them for for the service they give.
That is hilarious. And it's really quite interesting because as I was reading through the ShopRite results commentary yesterday, they just kept on talking about their strategy and about the innovation that they are implementing and just thinking of their next, always thinking ahead. Cobus, ShopRite, what's interesting is that David is like, they're frothy, but still a good business. And so it's not really a thing if you enter at this point because you are still getting value. But sometimes it can be frothy where you're like, actually not now, let me hold off. Your thoughts on ShopRite and maybe if there could be an opportunity for someone at this point who is not in the stock?
If you follow the sell-side analysts, a lot of them are very concerned. They're negative. They actually negative the sector generally at this point in the cycle because, frankly, we're in a bit of a deflationary cycle. The food prices have come off and inflation was close to zero within this business. And for them, a supermarket, to drive such revenue and unit sales increases in an environment such as that, it's just a phenomenal operational performance. Majority of the call it marginal growth, of course, coming through Checker 60/60, which has been, an absolutely phenomenal success story for them. And I think in that middle market in particular, we've seen continued underperformance by their peers. The Spar results, frankly, were very disappointing again, coming off an already low base. So it looks like they continue to innovate in that space in particular, perhaps lower down, not quite as competitive, where Boxer seems to be at the margin again, outperforming USave. But beyond that, we expect this trend to continue. And on top of that, the African markets have been tough. This used to be one of the major reasons to invest in ShopRite, was that access into the rest of Africa. But it looks like those markets are turning a corner. So I mean, something like Ghana going, slowly moving out of its hyperinflationary cycle. So we believe there's more upside, and we remain overweight ShopRite at this level.
Okay.
So, Nati, there's quite an interesting point that Cobus brought out, because if you look at the consumer stocks since the beginning of the year, there's been massive sell-offs. In fact, a lot of them are negative. I'm not questioning the quality of ShopRite's business. It's a really good business, but it's operating in an economy that's really slowing down fast, as we saw yesterday. And I think that's going to affect a number of businesses. It's going to affect the clothing retailers. It's going to affect the banks. The banks are not lending money. They're nervous of being repaid. It's going to affect the grocers, all of these companies as well. So when we talk about the market, just bear that in mind. We're operating in a very subdued consumer market. And you've seen, if you look at where ShopRite was and where it is now, there's been quite a big pullback. But in terms of the quality of the company, and what they're doing, I can't question that. But there is a good point that Cobus did bring up there about the valuations.
Yeah, you make a good point there with our benign economic growth, 0.6%. I was actually just saying, you can't even expect your phone to function properly with 1% battery. How can we expect a country to function properly with 0.6%?
I'm going to steal that. I'm going to like that. It's fine now.
There's a question here on First Rand, if it looks attractive or not. We did have Cobus and Nedbank results coming out yesterday. I saw someone picked ABSA because of those good results that came out of Nedbank. Would what you have seen so far in the banking sector make you bullish or still bullish on the banking sector at this point? Let's just actually start off with the banking sector in general before we get to First Rand.
Yes, and I mean, in particular, I think that's a pretty good call. Backing ABSA off the back of the Nedbank results. More specifically, I guess the credit loss ratio improved significantly, which, despite despite the call it the negative outlook on South African growth in general, it does seem that the lower interest rates are helping the debtors, the bank debtors, to service their loans. And on that basis, given that ABSA has significantly more retail exposure than the other amongst the big four, we believe that one is particularly well positioned to benefit from such a swing in the credit cycle.
All right, so good calls on ABSA. Also on Nedbank, we did see that buying activity yesterday on Nedbank was up about 4%. First Rand, specifically, David, yeah, what about that one?
Well, solid.
Yeah.
You can't fault our banks. They're all very, very well run, very conservatively run. I challenge you to go and get a loan from them. You're not going to get a loan because they're not going to take any kind of risk, unless you can put up decent collateral.
Yeah.
So they're very careful about how they operate. So they don't take any risks. And as a result of that, they come out with very good, solid results on the basis of their existing business. But going back to our 0.6%, it means there's no activity, there's no building, there's no new factories, there's no infrastructure. People are very careful about how they spend. So you can't expect anything out of the ordinary against that background. Yes, so, it's the cleanest dirty shirt. I can't remember who sang Sunday Morning or something. I think it was Chris Christopherson.
Yeah.
I'm going back way beyond when you listen to music, and he took out his cleanest dirty shirt. This is it's that kind of investment. Okay, where can we go to for safety? Banks. But don't expect anything spectacular. And I think that's a common theme in our market at the moment. Amongst among all the local stocks. I'm not talking those that are exposed to perhaps offshore markets and that.
I suppose there is an excuse me, David. There is an element of the best performer in this call it shrinking pie ultimately, and to some extent in the likes of Shoprite, of course, we're betting on them continuing to capture market share in a market that overall isn't expanding all that quickly. I must maybe specifically add to First Rand, that one's historically cheap at the moment, but there is a bit of event-driven risk in that because of this accrual they are carrying for that fine in the UK. So I'm no lawyer, frankly, but if you're of the view that the risk of that ultimately being enforced is overblown, this would be a rather cheap entry point. But that event risk is, I believe, driving significant discounts in First Rand at the moment. It tends to be more expensive than its peers, and it is certainly less so at the moment.
All right. I hear you on that. So, we'll see how that turns out. Cobus, just sticking with you. We're talking about that you can't expect anything spectacular to happen in this economy. But one thing that has been spectacular is gold. And there's a question on Goldfields and Pan-African Resources. Let's start off with Goldfields. If I remember correctly, Goldfields has been one of the laggards in terms of following that gold price chart. What do you make of that? But I think if I do remember from the last results, there was a little bit of buying activity.
Yes. So you're absolutely correct. It has been a laggard. Ironically, in a situation such as now, when gold is trading at all-time highs and sort of sticky at that high level. And of course, the uncertain environment we've been experiencing seems to be broadly supportive for the gold price. I am no gold bug. I actually dislike the industry as a whole, but I feel it's something that we attribute value to. But there's a business case for that, absolutely. Yeah. So Harmony has been the best player in that space because they are a marginal producer sitting in the assets that the others are frankly not interested. Whereas the likes of AngloGold and Goldfields have gone off looking for more attractive assets offshore. I think because of the maturity or lack thereof in some of those Goldfields assets, and there has been some, disappointing execution in terms of developing those resources. That's been part of the reason for Goldfields lagging the rest of the space. But ultimately, if I had to pick one today, perhaps for precisely that reason, it would be my pick of the bunch. If I were to express the view, and I think for at least the next 3 years and 10 months, we are likely to continue to experience volatility, uncertainty, and gold being regarded as a safe haven asset, and that should be accommodative. And so within that context, I do like that one still.
All right. Well, Pan African Resources was actually one that was closely following the gold price, but there has been a pullback. I think since February up until now, with a little bit of a bounce back. David?
Their results were a bit disappointing. This is one that we always believed was a great miner, chose its assets well, shifted a little bit, I think, into platinum. I don't follow it that closely, but I always, every day I look at the market and I see those shares are up and those are down. And it always seemed to have a very good following. But I think that the last set of results, if I recall, and I haven't got them in front of me, just disappointed. And that's why you saw that pullback from very high levels. I don't know enough about the assets that they have to comment. My fear is that as we're talking about a recovery, recovering China, stabilization in Europe, hopefully the end to wars and that. Also, we know that Trump's tariffs are going to be out the way. He's already told us that he's doubling down, and we'll start to discount those as well. I wouldn't be surprised if we started to see the top of gold and those assets starting to come back. I think put it this way, you've made your profits in gold. I think it's going to be harder to get that next leg out of the gold price. So you're going to get, while companies are doing well at the moment, you'll probably start to see them winding down as well as the gold price kind of shifts sideways and does nothing. I've got once again, this is just gut feel. I've got nothing to support that argument. But I think with things changing, gold might have seen its best days.
Well, let's take a look at things that you have support for, and that is your stock picks for today. Cobus, what are you betting on?
We've already spoken about my stock pick, so it's a little bit boring. I prefer something more esoteric, but Naspers again, just reiterating what we have already said. Beyond the Tencent play and all the rest, bullishness on the Chinese economy and Chinese technology in general. We are of the view that the current discount to underlying NAV isn't exactly justified, and we expect management to they seem to have become a little bit obsessed about plugging that hole. So we believe at the very least they'll continue to use share buybacks because they model this as well now. They follow this more closely than they used to. Almost like the Yanni Mouton used to do with PSG. I believe when the discount gets wide, they buy more aggressively. So from that perspective, we think those buybacks will remain accretive, and in time the market may warm up to the current CEO and his direction. Hopefully, this share reaction makes them realize they need to be more cautious. But beyond that, we think it's just an incredibly cheap entry point relative to its underlying assets, never mind the expectation for those assets going forward.
All right. David, where are you looking for returns today?
I'm going for same theme, recovery of Russia. Why do I say Russia? Recovery of Europe and recovery of China, especially on the consumption side. So I go luxury. And if you're going to go luxury, go right to the top, which is Hermes, which not even you can afford to buy those bags. So, and you know what? Even if they're tariffs, I think the people who buy those bags, the Birkin bags, and go to Hermes, it doesn't affect him whether the prices are up. It's just so snobbish. So it's a wonderful, wonderful business. And, so I'm sticking my neck out and saying, yeah, we're going to see a recovery in luxury against the backdrop that we've been speaking about.
David, you don't know my wallet. You can't pocket watch me.
Now, you're a Zara person, I think.
I am finished. Wow. That's it for today. Let's close the show. That's all for Stock Watch today. Thanks to our guest David Shapiro from Sasfin Securities and Cobus Potgieter from Southern Cross Capital. Up next, The Close. Stay watching.